Good morning, good afternoon, good evening from wherever it is that you're tuning in from. So I'm just going to wait a few seconds to just make sure everyone is tuned in and settled in nicely. After a couple of seconds, then we're definitely taking off. So ensure that you have everything that you need, because once the conversation starts, you don't want to miss a bit of the conversation. So I'm just going to give it a few seconds, then we would officially kick off. And whilst you're at it, if you can drop a message in the comment section, let us know where you're tuning in from. Across Africa, across the globe, wherever it is, let us know so that we identify ourselves. Okay, so let us officially kick off. You are welcome to the Ananse Roundtable 2. It is titled The Fashion Financing Paradox, Financing Pathways for Africa's Fashion and Design MSMEs. If you were here at the last roundtable, you know that this is content-packed, information-packed, and if you are a fashion or culture creative, you know that this is the place to be. My name is Ifnanya Igwe. I am a professional event MC as well as a broadcast journalist, and it is my delight to moderate the session today. So I'm just going to give you a quick context before we kick off. You see, the creative and the cultural industry has been one of the greatest drivers of the economy, especially in recent time, and we've realized so much so that it has been projected to inject about over $200 billion. Not only that, over 20 million jobs annually come 2030. So you know that it is a pivotal part of the global economy, even beyond Africa. And I'm going to take a very quick leaf from a report by Ananse back in 2023/2024. After surveying 7,000 creatives, they came to find that they came to find that over 70% of them are earning less than $250 monthly, which is a huge issue based on, obviously, the figures that I mentioned that it is projected to produce come 2030. And there's several reasons for that. They realize that the creatives do not have access to opportunities for financing and for growth as well. And one of the major questions that we're going to be answering, how do we address those barriers? Barriers to accessing financing from some of the traditional financing platforms. We could see barriers like the huge collateral asks that we have from some of these financial institutions, as well as poor financial literacy. So we're going to be exploring the pathways to actually financing the fashion creatives within Africa. And I have a panel packed with remarkable speakers from across industries. Now, to kick off, we're going to start off with a presentation by Botho Sania Saida, who's the research and strategy analyst at Botho Emerging Market Group. So Sania, please take the stage.
Good morning, everyone, and thank you for being here today. My name is Sanya and I work at Botho Emerging Markets Group. We have been supporting Ananse with research, thought leadership, monitoring and evaluation activities. This roundtable for us is very important because it focuses on one of Africa's most underrated economic engines, the fashion and design-led MSMEs. We talk about culture, we talk about creativity so often, but we do not talk enough about the economic potential of this very important industry in the continent. Over the next few minutes, I'd like to draw your attention to the financing paradox that impedes this sector, right? The key gaps affecting MSMEs and how they are trapped in this loop where the existing financing systems are not truly designed to cater to these MSMEs. While these MSMEs need the finance and the capital to be able to access, to be able to scale, to be able to grow, to be able to formalize, they also need that very capital that's impeding them from formalization when they go to banks to access credits, to loan facilities, and so on. And so in this conversation today, we want to highlight a few of the gaps and bring to you the lived realities of the creative MSMEs on the continent who occupy more than 70% of the fashion industry. And we want to identify and co-curate solutions to be better able to unlock finance for this sector. When we talk about the massive economic opportunity, like if you mentioned, this is a $220 billion revenue potential by 2030. We are on track to have 20 million jobs annually by 2030 just from this one sector, right? And it's not just about jobs or the revenue, it's also about the growth potential, because at the end we are investing now and we hope to see our investments grow in the long term. And so right now what we see is a 4.67% growth rate between 2024 and 2029. But despite all of this, the segment, there are a few key challenges that impede the segment from realizing its full potential. Like if you mentioned, more than 70% of MSMEs earn less than $250 per month, which means that they cannot use their existing revenues to be able to reinvest in their businesses because they are earning for subsistence and survival and not for being able to invest that money in scale and growth for their businesses. When MSMEs go and look to apply for loans, there's a 40% rejection rate, and this rate has grown from 20% in just 6 years, which means our financing tools and products are not designed to meet this this segment of the creatives, the MSMEs who are looking to access this finance. It means that there is an appetite, but there's a huge gap which is not being met, right? And what this means is that there's a $331 billion MSME financing gap in the continent, and this is the core segment where many of these fashion and design creators sit on. Now, what does this mean in terms of the lived realities for MSMEs? This means that they are unable to access a few key opportunities. They are not able to reinvest and scale their businesses, and they are not able to access e-commerce because this means that they are impeded from high setup costs and logistical costs, which are significant deterrents. And they're also not, because of this lack of financing, they're not able to access cross-border trade, because trade finance is an essential component of being able to access international markets. One of the key things that Ananse has been doing well is being able to understand this lived reality and has been designing solutions around these challenges. One of for example, as 1 in 6 MSMEs miss export opportunities due to finance, Ananse's cash advance facility and the e-commerce platform aims to bridge this gap. On one hand, they are providing subsidized logistics facility to MSMEs to be able to trade and access markets internationally. Additionally, their cash advance facility offers working capital to entrepreneurs to meet large orders. Additionally, Ananse also has been able to come up with FitMaster, an AI sizing tool, which helps designers optimize their capital needs as they do no longer have to invest huge amounts of money in inventory, and they can actually understand the sizing needs of the ready-to-wear market. Now, what this shows is that there is potential, there is opportunity, and there is in ways where you can innovate and work around some of the challenges that the creators are facing, right? And this is the note from which we want to use as a departing point, as taking this as a case study, and be able to now to one identify the challenges that creative MSMEs face in accessing finance, the pain points of the financial institutions who are looking to cater to these creative MSMEs, and then co-design solutions that can best bridge this gap today. So if to everyone, we're really looking forward to having this conversation with everyone today. And to arrive at determine pathways for traditional financing to adapt and innovative financing mechanisms that can unlock the growth potential for creative MSMEs. I'll hand it over to you so that you can kickstart this lovely roundtable.
All right. Thank you so much, Saida, especially for highlighting the gaps and the lived realities of the fashion entrepreneurs across Africa, specifically using statistics. Now, we're going to move on very swiftly to having a conversation with the CEO and the founder of Ananse, Mr. Sam Mensah. Mr. Sam, good morning.
Morning, Ify. Pleasure to be with you and our other experts on the panel.
It's always a pleasure, and I always love having conversation with you. Now, this brings us to the very first question. One of the things that I love about you is the fact that you're not looking into the fashion industry as an outsider. You're someone who's lived the experience because you're also a fashion entrepreneur, with your beautiful brand, Pisua, of course, apart from Ananse itself. And now just speaking about that, it means that you've been able to identify a lot of the gaps and a lot of the hurdles. Hence, one of the reasons why Ananse provides a cash advance platform, for creatives. Now, just looking at that, that is just one solution. We understand that the barriers are systemic. So what are the ways you are partnering with the stakeholders to ensure that you are addressing the barriers that the fashion creatives are experiencing to ensure that it is long-lasting and long-term?
Thank you, Ify. I've actually sat on both sides of this table. I used to be a finance guy. I am a reformed banker who now became a creative and came over to the lighter side. So this is a very interesting situation. I'd like to maybe take a step back and talk a little bit just about the fashion paradox. The paradox of African design is that Africa is blessed with an abundance of talent, and yet we find that there's a scarcity of growth. The African designers, although brimming with creativity and cultural richness, their businesses remain small and informal and trapped in a cycle of limited finance, low revenues, and restricted visibility. Then you have a situation where finance is both a cause and a consequence. So without access to finance, they cannot fulfill larger orders. They can't grow their businesses. They remain small. Remaining small makes it difficult for them to access finance. And so the very resource that they need to grow is denied to them because they haven't already grown. And then there's the issue of subsistence versus global influence. While local creatives struggle to make ends meet, their artistry fuels the imagination of global fashion houses. You have, major international brands like Louis Vuitton, Stella McCartney, and others launch African-inspired collections backed by vast capital, global marketing and distribution networks, and these collections sell out internationally, whilst the originators of the inspiration remain invisible in the same markets. And that's the really stark paradox that we have to confront. African design is powerful enough to shape global fashion trends, yet African designers themselves are locked out of the very system that their creativity helps to sustain. Their work is celebrated everywhere, except in the growth of their own businesses. And this is a challenge that we're trying to address. And here, it's a complex challenge with multiple facets, ranging from finance, skills, production, and market access. And we have a range of tools at our disposal. One we've spoken about, which is cash advance. It's quick cash. It releases instant working capital for urgent short-term pain. So immediate liquidity when a designer, a merchant has an order and they need liquidity immediately to source materials in order to fulfill an order without standing in a queue, without filling out long forms. Then there are also technological innovations like Fitmaster, which is a fitting tool. It allows customers to order from merchants, giving them their body sizes. And so merchants are then able to produce based on the orders that they're receiving rather than holding large amounts of inventory. And this reduces their inventory risk and their working capital needs. Then we're also innovating around data. A lot of the time, financial institutions ask for collateral. They ask for things that merchants cannot provide because a lot of the time the risk associated with servicing this market is because there isn't real proper data available to financial institutions. So with access to orders, trading history of these merchants, this is something that, collaborating with financial institutions, we are addressing. And then beyond fashion, We've all recently launched the Center for Design in Lagos, which is a fashion hub that really brings together everything a fashion creative needs under one roof. And that enables fashion creatives to walk in with an idea and get training and support and walk out with products that are market ready. And all of this reduces the risk of providing financial solutions to them. Then there are the partnerships. We have a partnership with MasterCard Foundation. We also have an MOU with the Nigerian government, 5-year MOU to scale the work we're doing with fashion hubs across Nigeria. And then we also do work with partners like African Union on policy harmonization for the creative industry across the African continent. So really, this is about providing a bridge from the informal to the formal, building that architecture that unlocks finance, that looks at skills, infrastructure, quality assurance and production, data, policy alignment, and all of these really key elements involved in really unlocking these creative businesses by providing them access to finance.
That is so brilliant. Now, just taking a look at the very next segment, which is the roundtable. What is that key point or factor that you would like to hear the speakers highlight all throughout the conversation?
So I think at the heart of this paradox is the fact that if you look at the average creative entrepreneur, 70% of them are women. Most of them are young people under 35. These are small micro enterprises. They're informal. And yet traditional financial models treat them like big companies, right? These are companies that they cannot give you 3 years audited financials. So, and this is at the heart of the paradox. So the question then that I would put to our esteemed panel is, what would it take for financial institutions, DFIs, and policymakers to redesign financial products and policies to fit the realities of these early stage or subsystem stage creatives so that their potential can be unlocked?
Thank you so much, Mr. Sam Mensah. So we're just going to move on very quickly into the roundtable, of which you will be a part of. I will be introducing the panelists, but as I do introduce them, I will quickly get into the conversation. So we're going to be starting off with Mr. Osahon Akpata, who is the CEO of Canex Creations, which is an organization dedicated to showcasing, to promoting, and to financing Africa's creative industries. Mr. Osahon, can you hear me?
Yes, I can, and good morning.
Good morning. Thank you so much for joining us. And I just want us to quickly kick off this round table. I want you to tell us what Canex's approach is to making fashion entrepreneurs bankable, because Mr. Sam mentioned a few things, especially some of the fears that some of these financial institutions may have when it comes to the creatives. So what is Canex's solution to making these creatives bankable?
Okay, so thank you for the question and good morning, everyone. I would start by saying that at Afreximbank and Canex, one of our priorities is to transform output of creative entrepreneurs, including fashion designers, into bankable information that unlocks commercial growth. Now, I'm going to have to tell you what Canex is, because I know that a lot of people do not know what Canex is. This is a program that was set up within Afreximbank to intervene in the creative industries about 5 years ago. And when it was set up, it was backed by a $500 million financing window, which has since scaled to $2 billion. And the program supports 7 verticals in the creative industries. Fashion is obviously one of them, which is why I'm here. Film and TV, music, sports, visual arts, and gastronomy, as well as literature. So there are 7. Now, the bank also introduced Canex Creations under the financing pillar of its intervention, because it realized that many of the businesses in the creative industries are MSMEs or startups, and they need venture financing. So Canex Creations, which I lead, is a company that does equity investments into intellectual property in the creative industries and other IP focused industries like life sciences and tech. And it has a mandate to deploy equity capital, be it venture or private equity, and commercialize global African IP. At Canex, we recognize that fashion entrepreneurs can be bankable, but traditional financing models, as has been mentioned earlier, haven't always reflected the realities of the fashion value chain. And we are very committed to doing something to resolve this. And I would say that there are three different thematic areas that we're looking at. The first of them has to do with aggregation for scale. We can see that there's tremendous value in collective sourcing, shared manufacturing, and consolidated market access. We know that the setting up of cooperatives is a good way for larger institutions to be able to interact with them. To give you context, Afreximbank is a wholesale bank. It banks other banks. So when you're thinking about an MSME and how it can interact with a wholesale bank, it's a little bit of a complicated relationship. However, as we look at pooling resources together where people maybe come together in the form of a cooperative, then we can see programs that support these groups and allow SMEs to approach lenders in a stronger and more formalized entities that can have clear cash flows and transaction costs that are lowered, right? So that's one of the principles, is the whole aggregation. The second one has to do with looking at how one can standardize lending and maybe even use digital to do so. Our studies have shown that majority of the fashion entrepreneurs or MSMEs, they require somewhere between $10,000 and $50,000 worth of working capital that would change the picture of their businesses. And when you think about that small, and I know it might even be smaller considering the research that was shared earlier about the 7,000 MSMEs earning $250 or less, right? But when you think about how that financing is, the ticket size, you have to think about how can that be done? In what manner would you be able to serve those customers? And I know that there are companies that are working on digital financing solutions where they can see the books of the businesses, have some way of seeing their fulfillment history, their export activity, if they have digital sales going on through e-commerce, to be able to see all of that. Because when you have all this information in one place, then you can start talking about alternative credit scoring that isn't just reliant on, as was mentioned earlier, 5 years or 3 years of audited financials. But you have other data points that you can use to make a decision on whether or not someone can be lent to. And then the third one I would say has to do with capacity building. I should have mentioned at the beginning that the Canex program has 6 pillars. Financing is one of them. And I know everybody is often thinking about how do we get money. But capacity building is another one of the pillars, along with policy advocacy, partnerships and twinning, digitization, and also what's it called? Sorry, and also market access or export promotion. Okay. So in terms of looking at the strengthening of business capabilities, we've launched several capacity building programs, and we've done a number of different initiatives that allow fashion entrepreneurs to develop certain skills. We need to do more. We're constantly working on this in terms of getting fashion entrepreneurs and other MSMEs the requisite skills and actually to be able to structure their businesses to be able to receive financing. Because in the case of Canex Creations, we're into equity investments. So before an equity investment happens from an institutional investor into a particular business, be it a startup or other, there are certain things that have to be in place. And if those things are not there, we wouldn't be able to bring finance into the table.
All right, Mr. Osanho, I would have to just...
Thank you.
Thank you very much. We'll still get back to you as the conversation continues, but we're going to move on very quickly to Mr. Obi Asika, who's the Director General of the National Council for Arts and Culture. Good morning, Mr. Obi Asika.
Good morning. Good morning. Pleasure to be here.
Thank you so much for joining us. And now, Mr. Osanho mentioned a whole lot that Afrexim is doing through Canex. And he also mentioned about standardizing lending through, digital means. But one of the things that a lot of these platforms look at is, if the fashion industry or creatives are being validated or even backed by the government, right? Validation by the government is very key and it's very important. So I want to know what the government is doing, if there is some high policy that they are implementing to validate the fashion industry that will sort of like lend credence in order for these financial institutions to be more confident in backing the industry.
Thanks a lot for the question. The thing is, there's a number of things that this government has been doing. First of all, there's a company called Versos, which is a data company, and they worked on mapping. So you had a situation where 10 of the key sectors in the creative economy were mapped earlier this year in terms of economic growth and jobs and opportunities and capacity building. And we've seen some very interesting numbers. Our own plans, we're targeting 2 million jobs by 2030. Our data is showing us that we can achieve perhaps 3 million jobs. The other key thing, I think, specific to fashion was one of the 10 sectors that was mapped. Beyond that, there's also been a deeper dive into the textile value chain. And even within the fashion, looking at the garment manufacturing. And I think perhaps one of the most important policy things that we've seen that we're looking at is a sort of global online market access program, whereby Nigerians, of course, because of social media, there's a lot of online business, there's a lot of attention, and primary retail in Nigeria is probably still through TikTok and Instagram in terms of the smaller, players. But we're thinking at the governmental level, there's a focus on how do we create a global fulfillment hub in Lagos for online commerce for Nigerian vendors, can create a designated Nigerian verified storefront for these entrepreneurs as well, and onboarding processes. So for us, there's a big drive on aggregation and digitization, because one of the things that you'll know if you're Nigerian is we have maybe, 50 to 60 major markets, which are typically offline if we sit here today and look at them, and they may be generating $50 to $60 billion a year in these markets. And a lot of the products in those markets is from the fashion value chain. So also looking at domestic markets, how can we better connect domestic markets? If you look at Kano and Katsina, and if you look at the leather outputs that come out of there and how they go to the global marketplace, then look at a place like Arera Market in the southeast in Aba, where you have people exporting leather goods through to West and Central Africa, up to the tune of 50 million pairs of shoes a year manufactured there. But the leather from the north is not touching the leather in the east. So that there's a big opportunity, we believe, in stimulating domestic markets to get connected and create bigger opportunities for everybody. For example, and I just want to put this to everybody on the meeting point, we have created, with our soft power in Nigeria, we have enormous attention, right? Loads and loads of people are watching and paying attention, but we have this big gap. Maybe Samuel or somebody who's in the court, think about this. We don't have product and merchandise for the attention we're generating. So whether it's Nollywood, whether it's Afrobeats, whether it's sports, whether it's wherever you want to look, we don't have product and merchandise. So there's this big multi-billion-dollar gap within Nigerian soft power. And I think the fashion industry is a big part of that.
Wow, thank you very much. And to everyone who's listening right now, because I know that we have a lot of creatives listening, that is a gap that you can explore, especially with merchandising. Thank you very much, Mr. Obiasika. So I'm just going to be moving on to Mr. David Maynard, who's the Country Director, British Council, Ethiopia, still on the conversation about policies. We know that the British Council advocates for policy, and we know that we can sometimes take a leaf from maybe industries and markets where it might have worked that we can also replicate. So I want to know, Mr. Maynard, what is that low-cost policy intervention that could possibly suggest that the government can implement to ensure that they are strengthening financial inclusion, especially within the fashion and the creative industry?
Thanks, Effie, and good afternoon to everyone from the east side of the continent. It's wonderful to be here. And I think if we can just take a step back for a minute before we look at the sort of policy angle, I think one of the things that we see in the work that the British Council does in many different countries across this super creative continent is that there are two fundamental issues that I think we see often, and one of those is recognition, and the other one interlinked is association. So that we often see that governments in some countries don't fully recognize the value, the financial value, and the historical, creative, cultural value of creative industry. Often because it's very small, as we've discussed before. We're talking about tiny little micro companies. And the flip side of that is that a plea for the designers that if they formed associations, if they became one voice or formed into groups where they could advocate more effectively for policy within government, they would potentially have a much stronger voice in influencing policy and opening up some of those financing options. Financing options and indeed external export market options as well. So to come back to the question around sort of policy, I mean, obviously there are lots of different policy options that governments can look at. Here in Ethiopia, the government has recently implemented a vast sweeping range of economic reforms. Many of those will potentially have positive effects in the future, but they're still working their way through. I think in terms of low-hanging fruit, some of the things that could easily be adopted would be sort of tax relief, tax incentives for SMEs to be able to export. Likewise, incentives for investors to invest in potentially higher risk investments like fashion, which might not be traditional places where they would look to invest. And similarly, to mandate state banks or state financial institutions to take on something like a creative economy fund, whereby, as we've discussed before, entrepreneurs, social entrepreneurs in particular, are not required to turn up with 3 years of financial records. They can turn up with a lot less and still have access to finance. So there are levers that countries can implement, and obviously some countries are doing that. But I think going back to the first point, government recognition of the value that creative economies create is key, and likewise a plea for designers and creative entrepreneurs to come together, form associations, and to have a unitary voice in policy. Thank you.
All right, thank you very much. And I think even so far, we've heard the speakers identify key areas: aggregation, association, and I believe that is an overarching theme that we've had so far. Now we're just going to move on to our next speaker, Dr. Karimi Njira, who's the director, HEVA Fund. Good morning or good afternoon, Dr. Karimi. Can you hear me?
Yes, good afternoon from here.
Fantastic. And now just speaking about the risks sometimes that a lot of institutions have or feel like they're entering into when they are supporting the fashion creatives for several reasons that have already been mentioned: the lack of data, not really understanding whether or not it's going to be a safe investment. So I want to know, based on your experience, what are those risk sharing models that maybe HEVA has found most effective in just attracting sustained capital from major commercial banks and pension funds to the fashion industry?
Okay, thank you. Before I share the risk models we've done, I think it's forming a basis of what financial products we've been using and how we've been able to have risk sharing models. So HEVA, we are an impact fund that does investment in the CCI space. We've been doing this for 11 years. And interestingly is that fashion is one of our largest portion. It currently constitutes 42% of our portfolio. And we've seen the average size that we've given out to businesses is about $18,000. So in terms of financial products, we do the working capital as most businesses require. We also do asset financing and trade financing. And we aim to solve two things: capital affordability and access to capital. So capital affordability, we do as low at very concessional rates, as low as 7.5% per annum on a reducing balance. And when it comes to access to capital, we also provide, we capitalize financial service providers. So then they're able to on lend to more fashion businesses in places we are not able to get to. And one of the things that I think Samuel mentioned was the need for working with platforms and aggregators. So we do work with platforms and aggregators. In Kenya, we work with a company called Shopzetu. The reason being, the advantage of aggregators is because they're able to provide you with data. You're able to get their fulfillment history, what are their sales data, the number of return customers. So then using aggregators to provide data has been a very good advantage. And based on the financial products we've been having, then we found a way of having risk-sharing models. And one of them is the first loss guarantee, which cushions institutions like DFIs and pension funds, because then one of the things they require, especially for pension funds, is capital preservation. So then at least having first loss guarantees enables to cushion their capital preservation, but also it increases the lender appetite from the bank's perspective, because then it reduces the risk they're taking in, and also the post-investment support, where we walk the journey with an entrepreneur to be able to take them through what are the systems and structures you need to have in place, so then when the next investor is coming on board, they're able to find a business that has very good governance, cash flow management, and market development that is well put in place. So I believe having the first loss guarantee and technical assistance is a risk-sharing model that we've seen working previously.
All right, thank you very much, Dr. Karimi. Now let's move on to Mrs. Mercy Mutua, who's the head of Access to Finance MasterCard Foundation. Now, we know that the MasterCard Foundation supports Ananse, and the foundation has been very, very positioned and intentional about ensuring that Africans have access to dignified labor. And we're seeing the opportunity that the fashion industry has. Now, Mr. Asaho mentioned something. He mentioned something about the credit data, especially when industries or financial institutions want to support or offer financial support to some of these fashion creatives or MSMEs. So I want to know, beyond just direct lending, how are development organizations and the public-private initiatives collaborating with the full spectrum of finance providers to just build a digital credit infrastructure that is necessary to sustain the non-collateral based and long-term funding for MSMEs?
Yes, thank you so much, Ify. It's really a pleasure for me to be here to engage in this really interesting discussion. As you've heard, my name is Mercy Mutua, and I lead the Access to Finance and Entrepreneurship work at the MasterCard Foundation. And perhaps, as you know, the foundation is a philanthropic organization, and we work with partners across the continents. And really, our focus is around enabling what you've mentioned, Ify, access to dignified and fulfilling work for young people. And of course, our special focus is on the youth. And we do this through our Young Africa Work strategy, through two main pillars, and that's education and entrepreneurship, with the aim of financial inclusion. And, one of our shared goals with our partners is really to enable 30 million young people to access dignified and fulfilling work by 2030, so just around the corner. And of course, the creative and fashion industry is one of the sectors that we're very keen on, because we are really convinced this is one of the powerful engines for the job creation that we long for. So you're really back to your question. I mean, my fellow panelists have said it all. And I don't think, perhaps one of the things that we should be asking ourselves is not how do we lend more, but how do we change the rules of the game and really allow more actors to lend differently? Because what's happening now is okay, but we feel there's more that can be done. So how do we change that mindset? Because we've heard about some of the things that the foundation does around what Dr. Karimi has talked about. Really, our role has become, we historically supported direct interventions like Ananse to do what they need to do, but we're more and more getting into the ecosystem play, and how do we change that? We're also working very closely with HIVA. I hope at some point we can work with CANEX. I know two of my colleagues who had attended your conference 1 or 2 months ago. And that's the whole ethos of the foundation, working with different players in the ecosystem to really address issues. And when you hear about the risk sharing mechanism that Dr. Karimi talked about, we are able to stand behind that because our role is to be catalytic. We have the framework or the infrastructure to absorb risk and hence unlock and catalyze funding. And so we're really actively trying to play that role where we come in and partner with the private sector or other partners that perhaps have a limitation to the risk they can take. And then we're able to step in there, whether it's through a guarantee, a fast loss mechanism, providing our funding for capacity building or technical assistance. So we take that first hit, and we're happy to do that because really that's our role. And not just this sector, but the other sectors we're involved in. But most important, I think, besides the aggregation you've been hearing about, something that's coming out very interesting that we need to talk about is this shared data asset the industry needs to create. And what this does, it moves us away from the collateral lending that you talked about, Ife, and allow these designers to create a digital footprint. And it's that digital footprint that we can start. And it's back to what I talked about, the mindset. How then do lenders take this digital footprint? Because that gives them information that they need, the aggregation of information that they need to make a decision around the lending. So if we can really get into that digital footprint, whether it's for designers or people from different sectors, it will really help support these SMEs to grow. Yeah, so that's initial thoughts from me.
Wow. Thank you so much, Mercy, for that. I mean, if you're listening right now and you are a fashion creative, what a time to be alive, where Ananse Africa is bringing the stakeholders together to fight for your future as a fashion creative, because I believe that everything that has been mentioned so far is absolutely brilliant. And obviously with these sorts of collaborations, it could become a reality. Now we're going to be moving on to the next round of questions, and I would like my panelists to please ensure that you stick within the time. You have less than 2 minutes to actually answer the question. I know it's a very exciting conversation, but we must work with time. Now, a whole lot has been said. And Mr. Sam, I will direct this question to you. I want to know, because, Mercy had mentioned, rather than us looking for different ways to lend, let's start by changing the way the game is played, changing the foundational structure of the game. Now, just speaking about the foundational structure, Mrs. Sam, I'm sure as your experience as a fashion entrepreneur, you might have seen some misconceptions and misunderstandings that financial institutions have of the African fashion MSMEs. So can you just tell us a few misconceptions or misunderstandings that you've come across?
Yeah, so I think having been a finance guy in my previous life and now in the creative industry, I think the biggest misunderstanding of the sector is that it is risky and therefore unbankable. And oftentimes, the reason for this misunderstanding is that there just isn't enough data at the disposal of financial institutions for them to be able to measure and assess that risk. If you blindfold someone and you put them on a surface and you ask them to jump off of it, they will be reluctant to jump, even if the jump is not that high, because they don't have the data to make an assessment of the risk that you're asking them to take. And therefore, humans, by our nature being risk averse, will rather not take the risk. And I think this is probably the biggest single challenge when it comes to addressing a sector that is mainly informal, and also mainly subsistence, although it has phenomenal and incredible growth potential. We have seen African designers be featured and scale to great heights internationally. There's a lot more talent where that comes from. But unfortunately, because of these kinds of misunderstandings, that talent is not being unlocked. Prior to the launch of our cash advance feature, which gives instant cash to remove liquidity to address liquidity issues when merchants have orders, you would find that the biggest reason why a merchant will reject an order is because they literally don't have the money. They don't have the money to go and buy the fabric, to pay the tailors, to make the garment, even though they have an order. And so I think if we, as an industry, can work together and collaborate and find innovative ways. We talked about shared access to data, trading history, things that remove the need for collateral and lower the barriers for more financial institutions to participate in the industry. I think if that is the outcome of some of these engagements, then that would be a very positive thing for the creative sector on the continent.
All right, thank you very much. And I'm just going to bring Mr. Osama in, because you had mentioned, Mr. Sam, that the lack of shared access to data, it's one of those misunderstandings and issues that a lot of financial institutions also face, and the creative businesses also face when it comes to access to financing. And I know that Mr. Hassan mentioned that Afreximbank, through CANEX, which they had established to pretty much focus on the creative industry, just building that platform and being able to identify certain unique traits of the fashion and the creative industries. What are the things that you found out that were misunderstandings that initially, before CANEX, right, financial institutions would identify as an issue, but as you established CANEX and got to understand the creative industry a bit better, you realize that this probably has been a misunderstanding?
Okay, so I think that one of the first things that we found was that there's actually significant demand in export markets for our creative, the fashion industry entrepreneurs. We have a program called CANEX Presents Africa, which takes 20 African designers to Paris Fashion Week, and we take them to Trenoy and at Tokyo Fashion Week, and they meet the buyers and they're able to get orders, right? So we've seen that, okay, they actually do have, there's even demand outside the continent from the export arm. But in terms of the ability to finance them, this is where there's a lot of work that needs to be done and is being explored right now. The perception of risk is definitely something that remains across the creative industries. And like Mr. Sam Mensah mentioned, it's because of lack of data. So what we found is that the data is not as well, available. It's not readily available. Stories are not told. Case studies are not done, which means that people in the financial services sector remain with their minds closed to the creative sector because they haven't seen enough information. They haven't seen, oh, this is actually what it takes. This is how you can lend without losing your money in the creative industry. If they saw enough of those case studies, I think that we would see more financial institutions doing this. The third thing that we found is that there are actually small financial institutions, sometimes microfinance banks, who are beginning to focus on these industries and serving them and developing knowledge and capabilities in local markets. And that was also a surprise because I would have not known if I hadn't been involved that there are actually people who are doing this. They might be at a smaller scale, but they're growing. So those are the things that we found. Thank you.
All right, thank you very much for that. Now let's just move on very quickly. One of the
sorry, before we move on, I just want to emphasize something that Mr. Osahon said with a personal anecdote. So as some of you may know, we also have a fashion brand called Kisua. And so we have experienced some of these real world challenges that he's talking about. We got a very large order sometime back from a major South African retailer called Foschini for thousands of units. And we ran around and we could not find a facility in order to fulfill the order. And the reason why the financial institutions were declining was because they were concerned about what in the business they call execution risk. So you have an order, fine, but what happens if after you have fulfilled this order, your customer refuses to pay because the product does not meet their quality requirements? And so because of that, we ended up only delivering a fraction of the order because we could not access the finance to fulfill the entire order. And so what the retailer then did was imported products from China in order to make up the inventory that they needed for the season. And so just reinforcing what Mr. Sahan was saying about how real this problem is and how important it is. If we are going to create jobs, empower young people, as Mercy was saying, we really have to find ways of unpicking and unlocking these bottlenecks.
Well, it's very interesting that you did mention that, because I actually made reference to that at the beginning, saying that you, having experienced it, and from that experience, you've been able to prefer solution, at least Ananse, to an extent. And we know that Ananse can't do it alone, and that's the reason why we have conversations like this. And just to make reference to the Ananse Center for Design, now a lot of creatives have the opportunity to probably just go in with their design, and then, the orders are fulfilled. But like I mentioned, Ananse can't do everything, and that's the reason why we're having this conversation. Now, still speaking about access to finance, I'm just going to move this question to Dr. Karimi for a second. One of the major hurdles or issues that the creatives face is the sometimes outrageous collateral demand, right? But apart from that, what are the other non-financial risks that the investors, I beg your pardon, they cite the most when it comes to financing the fashion MSMEs in Africa?
Thank you so much for that question. It's true, collateral becomes a problem. However, we've seen other risks when it comes to investment. One of them being compliance and regulatory vulnerabilities when it comes to compliance to tax laws, labor laws. So you find some MSMEs do fall short in terms of compliance. Either they're not issuing contracts properly they're not issuing employment contracts properly, labor standards, or probably even meeting like environmental safety regulations. So then you find investors could tend to decline this kind of investments because of hidden liabilities. If you're not tax compliant, there's penalties. If you have a problem with safety in the production houses, then there's a risk of being shut down. That means there's also inability to either meet the export requirements. So then investors might tend to decline when the compliance and regulatory are not properly put in place. The other thing is on founders' risk, where you find the creative director is one person. They're the founder, they're the ones providing creative direction for the brand. They're doing client relationship, they're doing a lot of production decisions, a lot of operations decisions. So then the question that we tend to ask ourselves is, what happens if the founder leaves, or the founder has a burnout, or they're overwhelmed? Then there's a big implication in terms of how the business is going to progress. The other thing is in terms of inconsistent production quality. So you find maybe your quality on different batches of production is different. So then the risk that we find as investors is there's a lack of either standardization production process, or there's weak QC, the quality control systems. So then there's a fear from an investor. If you get a large order from a retailer or from an export buyer, then are you able to maintain the same level of production standards? Are you able to maintain the same level of QC checks throughout the various productions? And then we've also seen in terms of IP protection and brand vulnerability. So then are you able to, are you able to trademark your designs? Are you able to properly register your IP, so that then at least your brand is properly protected from either duplication or from duplication and the rest? So other than collateral, we've seen the inconsistent in terms of production, the IP protection, founders dependency, and compliance and regulatory.
All right, thank you very much. I'm just going to bring Mr. Obiasika into this particular question as well. Just looking at some of those risks that are non-financial risks that you see a lot of the financial institutions always highlight or identify is an issue before they fund some of these fashion MSMEs. Can you cite some of those risks that you might also have identified?
Well, I mean, in terms of the risks that people are looking at, I mean, I think some of it has already been discussed here, which would be sort of having some sort of KYC on the specific entrepreneurs or the specific MSMEs, a bit more data on what they've been doing and how they've been doing it, and perhaps also some sort of market information not just based on the SME, but on the larger markets that they're trying to play in. So I think a lot of times, also the funders themselves in the specific market perhaps also need some level of capacity building and education to better understand the sector that they're supposed to be funding. I think that itself is also a bit of a gap that we see, I think, in local markets. And there's a lot of knowledge share, I think, that can happen there. One of the things I should mention, though, which I think is a major win, certainly in Nigeria, and I think will have a significant impact on everybody in this space, not just in the fashion space, but in the creative space, is that for the last year or so, there's been a significant effort led from our ministry with this interministerial strategy across, I would say, 4 ministries: the Ministry of Arts, Culture, Tourism, and Creative Economy, number 1, the Ministry of Digital Economy, the Ministry of Finance, and the Ministry of Trade and Investment. And this is actually specific to an IP framework, specific to creatives and startups. And this has now gone through what we call FEC, which is the Federal Executive Council, which is the highest arm of the government in Nigeria. It was announced about a week ago or 10 days ago. And what that IP framework is going to enable, because as it goes, having gone through that process, it will then pass on to the Bankers Committee, which is sort of the governing body for where the banking policy comes in. And what this is going to enable is to enable what has already been alluded to earlier, which means that IP being intellectual property, and in the fashion context, that could be your textile, your brand, your design, your lookbook, or whatever, are going to be available as collateral for finance. So when you talked about earlier about the potential of how do people get funding, I think that's going to have a big impact, not just on the fashion side, but also on the startup side, because for the first time, we're seeing in Nigeria specific legislation to back ideas, right? Which is not something that has happened before. So I think that's a big win. Of course, implementation is going to be key, but I think the bankers will be on board fully, and that's coming through. I think in the next 3 to 6 months, we'll begin to see this come into the banks in real time.
That's absolutely brilliant, and we hope to see it to fruition as well. Now, just speaking about this IP framework, Mr. David, I'm going to bring you into this next question. You know, Mr. Obiasika has spoken about what the Nigerian government is doing, especially implementing or working on this IP framework. I want you to just talk to us about what you think a standardized Pan-African legal framework can do. What role can it play to just ensure that the fashion industry in Africa is now more attractive than other industries? You know, when we talk about investment opportunities, we always hear about tech. Tech is the future, but we forget that people will keep wearing clothes, right, for the rest of our lives, hopefully. So in your own experience, what would you say that a standardized Pan-African legal framework can do to make the fashion industry in Africa more attractive to investors?
Well, it's a good question, and one I think one of the panelists mentioned earlier the African Union, and I think this is perhaps a role that the African Union could step into to foster greater collaboration across countries or across regions within Africa to have greater understanding of legal frameworks that work across countries, across regions. We see that in some countries, in East Africa, for example, there are commercial and trade unions, but some countries opt in, some countries opt out. They're not uniform, and this is a bit of an issue, I think, insofar as we see that Ethiopia, for example, is not part of some of the COMEX East African unions, and that might be something that could be looked at in the future. But one of the things I think we need to be bearing is sort of educationally within, not only amongst the designers themselves, but amongst policymakers. And going back to the point I was making earlier about recognition, the fact that this industry, as has been highlighted, is going to generate a lot of income, and it's going to generate a lot of jobs. But there is not perhaps the understanding universally for that. And so, agencies like HEVA and like MasterCard Foundation that foster these kinds of discussions as well with governments, I think we're very keen to see more discussion around this, and to see that governments recognise, take more seriously the opportunities that exist within the creative industries. And as I mentioned, bringing in African Union to perhaps underpin some of that as well. Thank you.
Thank you very much, David, for that one. So we're just going to be moving on to just slowly but surely wrap up this very insightful conversation. And I'm going to be starting with you, Mercy, just taking a look at all that has been said and all that there is to be done. If you had the opportunity to implement one policy that you could change the entire direction of the fashion industry dramatically to improve capital flow, what will that policy be?
Thanks, Ife. That's a technical question, and I'll answer that quickly because there's something else I wanted to say. But one of the things then I would do is perhaps set up a grantee fund specifically for the sector, because you've heard it's about the risk. And there are players, specific players like ourselves, philanthropic players, that is the work to take on the risk and catalyze and unlock funding. So really is to fund this sort of Pan-African or nationwide grantee fund that can really work with the private sector to unlock the much needed funding for the sector. So that would be sort of my broader thinking on the supply side. But on the softer side is, when everything has been said and done, I think there's still a lot of good stuff that's happening in the sector, and we need to celebrate it more. We need to speak about it more. We need to change the narrative. And I mean, if you see what Sam has been able to do over the past couple of years, it's been a lot of work, a lot of sleepless nights, but something beautiful has emerged out of the center, the fashion hub that he's set up in Nigeria. I'm not sure if we're amplifying and talking about it enough, even just within Nigeria Obi. I don't know what support you're giving him, and recognizing that effort and seeing how then we can learn from that and see how we can actually scale it across, the continent. That's something we should be thinking about. And why I'm saying this is I think as we celebrate the creatives, we speak about it always as the art, which is okay, and the nice, entertaining sector. But as David has just said, I also don't think we're talking as part of the narrative, changing the narrative, is positioning it to be a strategic sector. We've talked about the jobs that can be created from this sector. We've talked about the economic empowerment and opportunities that sit within sector. So how do we blend the two? The art side of it, but also the seriousness of it and the impact the sector has on the economy. I think earlier on when we heard about the 20 million jobs that can be unlocked by 2030, just do the quick math. That's about 4 million jobs per year, 10 million youth get into the job sector every year. We're talking about 40%. And even if you cut that into half, we're talking about 20%, a sector that can actually help with the biggest problem in the continent right now, which is youth unemployment. So is that how we're positioning the narrative, besides just the art side of it? How about the strategic side of it? Are we backing it with numbers, with evidence? Or Sahon, you talked about the evidence, the stories, the local evidence, not just the global. And that's part of what we like to do at the foundation, really curate this evidence and see how we put it back into the ecosystem to support our partners make decisions. So I think that bit of changing the narrative and how we position the sector is very important, both on the art side and also on the strategic side. So thank you.
Wow, thank you so much, Mercy, for reminding us how important storytelling is in shaping narratives. Because if we shape the right narrative, we create a better picture that perhaps will give some of these financial institutions more confidence to back these fashion MSMEs in Africa. So, Mr. Asahan, I'm going to bring you in as well. Just speaking about one policy, if you had an opportunity to change one policy tomorrow dramatically, that will lead to a change in how capital is being given to, you know, the fashion MSMEs in Africa.
Okay, so if I could implement one transformative policy tomorrow, and this is just a wish, I would say that it would be something like a continent-wide creative working capital guarantee scheme that is backed by both public and private partners. This is the rationale. Most of the fashion MSMEs fail not because of demand, but because of cash flow gaps, right? We talked about the financing gap. I think it was quantified at something like 331 billion. Traditional lenders view fashion and other creative industry entrepreneurs as high risk due to the lack of collateral and the perceived volatility of the markets. A dedicated guarantee scheme, similar to the way we have export credit guarantees for commodities, would shift the risk from the entrepreneur to a blended finance mechanism. This would mean that you could have purchase order financing from designers with confirmed orders, like what Sam was talking about for Shini. Then you could have inventory financing for brands preparing for export runs. You could have equipment financing for the small manufacturers and even bridge capital for scaling production into regional markets. So I think that a policy like that could have immediate catalytic effect, but it's important to pair this type of guarantee with strong data, credit scoring data and other alternative forms of data that can help make something like this come to life. Thank you.
Thank you very much. And you did highlight the importance of the public-private partnerships to make this a guarantee. So thank you very much for that one. Mr. Obiasika, I would bring you into this as well. You know, apart from the IP framework that you had mentioned that the Nigerian government is working on, if you had the opportunity to implement one policy that will just sort of transform how capital is being given to the fashion MSMEs in Africa, what would that be?
You
have to unmute yourself, please. We can't hear you.
My apologies. I think that between Mercy and Osahan, they actually already gave the answer in terms of the credit guarantee scheme. I think that if you did that for fashion and the creative sector in principle in a place like Nigeria, where we begin to invest in the people as the key asset, right, then I think that you'll basically be unstoppable. That's the foundational thing. I did want to say one other thing. Vis-a-vis what Mercy was talking about. And I think that's exactly how we view the work we've been doing in government on the Nigeria side. It's really about strategic comms and advocacy. I tell the people in the Senate and the National Assembly all the time that, yes, we represent the entertainment industry, but I don't sing or dance, right? So that I'm not here for your entertainment. Do you understand? We're here for the ecosystem. We're here looking for the resources to build out. And if we are sitting here in situations where things like the fashion industry, hair and beauty, music, these are just three segments, are all multi-billion-dollar sectors right now, not potentially. But this is happening in spite of government, right? So as government, what can we do to enable these situations and grow this ecosystem? That's our focus. How do you drive growth and job growth and opportunities? And to do that, I think it's some of the things already mentioned, but also I think for us, a lot of digital platforms, a lot of aggregation, and trying to just push into scale. You know, we have enormous attention focused on our sectors, and perhaps the one key thing in a place like Nigeria, which can hopefully percolate across the continent, is to take this sector as a key strategic asset of the people and of the country. So it's not just something nice to have, it's something that actually empowers us and takes us beyond. So I think that's where we sit, and that's what we're looking at.
Indeed, that it's not just a nice to have, it has become an integral part of just changing and shifting the narrative of the fashion MSMEs in Africa. So I'm going to bring you in, Dr. Karimi, if you had that opportunity to implement one policy that will change the conversation about capital, especially as it concerns the fashion MSMEs in Africa, what would it be?
I think I agreed to the credit guarantee. I think it's very important. Other than de-risking investors and accelerating lending, I think it's a way of formalizing the sector without really punishing any business or sounding like you're pushing the SMEs, because then to assess a guarantee, then there could be basic requirements from having simple financial record, compliance, proof of production capacity, etc., that then moves the sector to formalization without really forming it like a form of punishment, but it somehow standardizes and formalizes the sector. And also it moves fashion from being culture to being an economic activity. So then it forms part of the economic policy of the countries alongside other sectors, like manufacturing and agriculture. So I do also agree that having that national guarantee fund would really do good service to the sector.
All right, thank you very much for that one. Mr. David, I'd like you to also join this conversation about that one policy, if you could implement it tomorrow, and that will have a dramatic change in this conversation. What will that be?
Thank you. I think, obviously we see that different economies have very different parameters and are very different in terms of their on the development line. I think here the establishment of a creative economy or a creative industries type fund to look at funding fashion, but also other creative industries would be an absolute hit. It would be a winner, and it would be relatively easy to implement. So I think that would be the one policy I'd be looking to see achieved. Thank you.
All right, thank you very much. Mr. Sam, we're going to wrap this segment up with you and that one policy.
So mine would actually be an existing policy that we just need to make work better. As is often the case on the continent, sometimes the challenge is not the policy, but the implementation. With the work that I do at Ananse, I am really sometimes surprised by the amount of interest from within the African continent on our respective fashions. South Africans want sandals from Kenya. Kenyans want dresses and shirts from Nigeria. Ghanaians want kaftans from Senegal. And the biggest obstacle is import duties that sometimes just make it unattractive. Sometimes also the logistics costs can be expensive. But if we can actually get the AfCFTA to work, Mr. Salman was talking about the amount of international demand there is, but there's also a lot of demand on the continent that is currently not meeting its full potential, because AfCFTA, although it's there in theory, in practice, those of us who have to move products around see that it doesn't work, even though the politicians are saying that, are celebrating this thing. So that would be my one thing. Let's get AfCFTA to work. It will unlock so much growth for fashion creators.
Thank you very much, Mr. Sam. And this brings us to the end of this particular segment. It was nothing short of insightful, filled with endless possibilities that could be the story of the fashion MSMEs in Africa. You see, as a broadcast journalist, one of the major highlights that we would always discuss about on radio is the fact that for us to actually see change as our reality, it is the individuals who have a voice, that already have a seat at the table, that should take the charge in fighting for those who may not currently have a voice. And that's exactly what we've seen so far with our brilliant panelists, just ensuring that we are discussing, what the possible next steps could be to help the average fashion creative in Africa who might not have a voice just yet. So thank you so much for all that you have shared so far. Now we're going to move on to the question and answer segment, and I can see that we have a few questions, and I'm going to try my best very quickly because we are sort of kind of out of time, but these are very important questions, so please just pardon us. So this is coming from Franklin Amo, and I believe that this is a fantastic segue because he also made reference to the AFC TA, talking about, and I'm just going to read it as he has put it, saying that he has noted everything with well-deserved excitement, the entry of global distribution platforms like Netflix and equivalents in fashion and apparel and other creative sectors. However, he said, I would be pleased to hear from the panelists their ideas for growing, catalyzing, and strengthening domestic intra-African markets in media, fashion, and creative sectors. And I want to know if any of the panelists would like to answer this. Mr. Obieska, would you like to get into this? Or Mr. Osaron, would you like to speak on this?
I mean, I can speak. Okay,
Yeah,
please go ahead.
Please go ahead.
No, I would just say that incidentally, that I spoke at an AFCFTA Secretariat event in Accra called Creative Connect Africa yesterday, where we discussed leveraging the power of the 55 African markets. And this is, as was said earlier by Mr. Samuel Mensah, we need to actually talk about the reality versus the theory. You know, there might be a policy that is passed, but if I'm a fashion entrepreneur going from, you know, Ghana to Togo with my goods, and I meet a customs agent who doesn't know the things that are supposed to be, then that's a little bit challenging. But in terms of our own marketplace, there are 1.4 billion people. Different people are looking at how to leverage those eyeballs in terms of creative content. For instance, you mentioned Netflix. What is the Africa equivalent of that? And we do have one or two platforms like Showmax that are global, or should I say, across the continent. We need more. We need more options that are fit for market transact, the data landscape, you know, being able to access the information, etc. So there's work to be done, and it's ongoing, and we hope that we can get some good results. Thank you.
All right, thank you very much. Does any other panelists want to jump on this, or are we good to move on to the very next question?
I was just going to say, just to add that I think one of the big things that everybody can do is a better line of sight. If you're sitting in Accra, it's very hard to have a line of sight on what's going on in Nigeria. If you're sitting in Nigeria, it's virtually impossible to see what's happening in Tanzania, Angola, you know. So we really don't see our markets, right? AFCTA is nice theoretically, but beyond the fact that some of us drove intentional collaboration through the music industry and other things 15, 20 years ago, we still have not really built internal markets. But this is not even just across the continent. I alluded to this vis-a-vis the Kano Abba thing that I was mentioning in the Nigerian domestic market. So I think that market linkages is critical for all of us in Nigeria domestically, as well as then into the region and then continental. Because everybody talks about going global. I'm like, until you dominate your local markets, why are you going global? Because what's the point? If they don't know you on your high street, why should they know you in New York or somewhere else, right? I think that we keep walking past our market, and our principal market is our next door neighbor or the person next to us. Yeah.
Brilliantly said. Thank you very much. Now let's move on to the very next question. This is from Bernard Ulaya, saying, in as much as I agree on the importance of storytelling, I work in the rural development whereby rural microfinance is a big issue. The stories certainly tell a lot. My frustration is usually on the magnitude. One good story in a village of over 75,000 households. The stories kind of lack the how many are reached to make a difference in that particular community. What can be done about this? Does any panelist want to jump on this particular question? Mr. Sam, I'll push this one to you.
Yeah, I will. I'll try and answer it. I think that I understand why the gentleman is making this point, because sometimes there's a disconnect between celebrating success and understanding what it takes to actually engineer that success. And so it is very important that as we tell stories, we do not gloss over the hardships, the difficulties, the failures that were encountered along the way. And I find in my interaction with, from my personal experience, we have this program we run with Mastercard Foundation for young creatives. We have this fashion hub in Nigeria. We're scaling into other African countries. And so we get to interact with thousands of creatives. And I have the privilege of engaging with them and a lot of the time sharing some of my own personal stories. And whilst a lot of them will consider me successful, the value that I think I can bring to an interaction with a young fashion creative is not just telling them about my wins, but telling them about the difficulties, the challenges, the bad decisions that were made along the way, the losses, and then what was done, the orders that were lost because you were not able to find the finance on time, and so on. And then what was done, how did you go about overcoming that? So I think I appreciate the question. I think some honesty around the challenges when we're celebrating success is very valuable.
Thank you very much for that answer, Mr. Sam. Now, just moving on very quickly. So this question is by Abubakar Musa Baba. So that question may not be answered, as we know that Mercy has stepped out, and she would have spoken on behalf of Mastercard Foundation. But this question still about the AFCFTA. This person is asking, how does the AFCFTA rules of origin simplify or complicate their current supply chain? And what role do platforms like Canex or Ananse play in helping them become compliant and AFCFTA ready for trade finance? So I'm going to start with you, Mr. Sahon, just taking a look at the role of Canex in this.
Sure. Thanks. Afreximbank is a trade finance bank. That's what it was set up for. And this is the reason why Canex was set up inside Inter-Africa Trade and Export Development Finance, a cluster within Afreximbank. What we do with the Canex program is capacity building. As part of what we do export promotion as well. And with the capacity building, we can and will work with the FCFTA Secretariat to do some capacity building around making these businesses compliant and AFCFTA ready for the trade finance which we offer. Now, I will also use this opportunity to mention that next year in December, there's going to be Canex Weekend, which is a massive convening of creative entrepreneurs and investors, buyers, and policymakers. This is an opportunity to test this out. And we would use that opportunity of those coming to participate at Canex Weekend to do some capacity building beforehand, to say, hey, listen, you're going to be going to Lagos to share some of your goods and sell. How can we make sure we take advantage of the FCFTA? So it's a practical opportunity, and there's enough time between now and then to prepare. We have about a year. Thank you.
Thank you very much for that one. Mr. Sam, can you step in here, please?
Yes, so we also, just to add on to what Mr. Hassan said, we also have partnerships with global logistics suppliers, Pan-African logistics suppliers, and we collaborate with them to support our merchants in being compliant. But oftentimes you find that that's not the biggest challenge. The biggest challenge often isn't that the paperwork is incorrect or inadequate. The biggest challenge is that you meet a customs officer who doesn't know what AFCTA is, and he pulls out a piece of paper from his hat, and he gives you what the duties and taxes you should be paying are. And so I think until we get to a point where we have the proper digital systems and infrastructure in place to manage this cross-border trade at the coalface, at the actual ports of entry of product, I think there will be challenges. But yes, to answer the question that was asked, there is support available to comply. But oftentimes, even with the correct documentation, you might find that depending on the country, you still have to pay duties, even though in theory you should not.
All right, thank you so much, Mr. Sam, for answering that question. And I would also ask you to just give us a call to action as we wrap up this incredible session.
Yeah, so thank you everyone for participating in this excellent discussion. I have really enjoyed it. I think we benefited from the wealth of experience and knowledge of all the speakers who participated. I've tried to pick out, one thing that I'm going to take away from every single speaker. From Mr. Sahar, I think he talked about the demand for African fashion in export markets, and also mentioned the need for an African guarantee fund. This was a recurring theme that kept coming up. Mr. Obiasika spoke about the 20 to 30 million jobs that they're looking to create in Nigeria by 2030 from the creative industries, the progress made in IP processes by the federal government and what they're planning to do there to improve IP monitoring and enforcement. Again, the credit guarantee again was mentioned there. Ms. David Maynard spoke about the importance of government recognizing the value of the creative industries and the need for the industry to also come together to speak with a unitary voice so that they are heard louder. He also spoke about, creative funds and the need to have more of these kinds of creative funds across the continent. Again, Dr. Karimi brought up the point of the guarantee fund, first loss guarantees, and how these really help. And then Mercy also from Muscat Foundation also mentioned the guarantee fund and also encouraged us to celebrate good things and change the narrative. So I think if there's one call to action from this session, it's we have to figure out how to set up this credit guarantee fund, because it looks like it will solve a lot of the problems that we've identified that are facing and confronting the industry.
All right, thank you so much. What a beautiful way to wrap up this session. And to our incredible panelists, thank you so much for all the insights that you've shared, for dissecting not just the challenges, but also highlighting the opportunities for growth, for innovation, and also for investment, which is very important to the fashion industry in Africa. We appreciate you. And for everyone who tuned in from across the globe, thank you so much. I implore you to follow Ananse.Africa. So just do that on Instagram. You thank me later, because these conversations will be ongoing. You want to ensure that you are a part of the conversation concerning what the future of the fashion industry is for you as a fashion creative in Africa. My name is Ifunanya Igwe. I'm a broadcast journalist, and it was my utmost pleasure moderating this session. Once again, thank you very much. And please click the link in the chat box so that you could give us feedback, your honest feedback about this session. And I hope it has been nothing short of insightful. Thank you very much. And we have come to a close.
Thanks, everyone. Bye.